Hey everyone, Brian Balon here, your local Phoenix realtor. It has been a long time since I've done a video, and it's great to be back. I'm here with a May 2021 real estate market update. We have a lot to talk about. The market has been very crazy since we last talked, since the beginning of the year, since last month. So we're going to get right into it. But before we do, if you haven't already, please hit the subscribe button, like, comment if you have any questions. And if you're checking us out here during the live stream, feel free to say something in the chat. Love to shout out and answer your question. So for the numbers, so here's what we have for market activity. So first of all, active listings, and this is excluding anything that's under contract, just anything that's on the market without a contract. There's 5,080 active listings versus 14,051 last year. So we're down 63.8%, but up 24.2% from 4,089 last month. So last year, so year over year isn't as accurate because the pandemic started in March 2020. And even in May or April, we still had, we're still in the beginnings of it. So it basically flatlined real estate transactions, but it really quickly resumed back in June once the, some of the restrictions were lifted and, the essential workers and travel and et cetera started to resume a lot more comfortably, especially in Arizona. So year-over-year comparisons will be a bit skewed, but we have more listings this month than last considering the seasonal shift. Now, that's important because seasonally in quarter two, usually we see listings increase as a result of school getting out and home buyers and people needing to move will make their moves while school is out, or usually in the beginnings of summer or the end of the school year. But we're seeing actually a shift downwards. So just an interesting observation. Under contract listings, so that includes pending, anything pending, under contract backups. We have 12,187 versus 9,512 last year. So we're up 28.1%, but down 3.1% from 12,575 last month. So what's interesting about that is that we're down 3.1% from last month. And so basically that's an indication that demand is cooling. When seasonally, April is when sales start to increase. So not only active listings go up, but also anything that's under contract. So buyers engaging in sales and getting things under contract is down from last month. So that's a little bit of an indication there of and we use that to measure the level of demand that we're seeing. So we're seeing a slight cooling there. So actually closed volume. So what actually closed and home buyers have closed in their homes, 10,172 versus 7,174 last year. So we're up 41.8% year over year, but down 2.2% from 10,396 last month. So we're also not only having less under contract, we're also having less closed as well. So what is the average monthly sales price per square foot? So right now we're at a whopping $243.50 versus $183.96 last year. So that's up 32.41% and up 5.1% from $231.75 last month. I just want to make a quick comment about that. That is actually quite incredible for 1 year for the average monthly price per square foot to go up almost $60. So if you're out there on the market and you are looking for homes and you see something, that you're just wondering, is this priced correctly? Now, on average, because this $243.50 is for all areas and types, so it's just an average, but you can just take that number, multiply by the square footage, and you can get a baseline price for the home. That's going to be more accurate if you're using, you're trying to evaluate a single family property, less accurate if you're going to evaluate something like a condo or townhome, especially if you're in the lower price points as well. So anyway, 32.41% year over year is incredible, and in 5.1% in just 1 month. So that is quite incredible appreciation, record appreciation growth, actually. And I want to show you just how crazy that is in terms of our Phoenix real estate market with some more data later on. So what I've been seeing out there is that homes that are selling between $300,000 to $400,000 are being listed for $15,000 over the comps and selling $10,000 to $70,000 more over asking price. So I've had clients, go through this. I've had, we would call into different properties that our clients were interested in, and we've heard stories, house listed for 290, selling for 350, 360. So it is definitely a very peculiar market, and very aggressive market, especially for buyers. If you're a seller, it's good news. That's another story. We'll talk about that more later. So the monthly median sales price is 373,000 versus 299,999 last year, which is up 24.3%, and just up 4.1% from 358,250 last month. So the median is going up as well. All types of property in all areas are increasing in their median sales price and their average sales price. It's going at an unsustainable rate. So I would, to me, this is kind of a short-term squeeze, and I would want to see what happens in the next 3 to 6 months. I predict, based on the inventory numbers and the demand, that we haven't seen a significant enough shift in demand to actually, see a significant turn towards a buyer's market. But it remains to be seen. I mean, we're still just seeing some indicators in the past couple of weeks that we're heading towards a buyer's market. But we're so deep into a seller's market, it'll be a long time before we see any relief. So yeah, so basically, pricing markets just really don't increase dramatically over time. If prices go up, demand should adjust lower. So that's what we're seeing. In 2005, with the run up before the recession, the demand was actually increasing, and partly because it's just more speculation. The market's supposed to react by basically as prices go up, demand reduces. But in 2005, 2006, we saw the opposite, which was indication of a bubble. So that was a great concern, and is not something we're seeing now. So what we're seeing now in terms of the market is due to natural fluctuations of the economy, and low supply, above average demand. Now we're seeing cooler demand, and then we're starting to see the numbers play out as they are. We'll just need more time. We'll need more time to see if it will turn more dramatically, but current indicators will say we need more. Well, first of all, we need less demand, and we need higher inventory. So we'll be watching those numbers. So we'll need time. So a couple of things actually I want to go over is, one, in terms of list price to sales price ratio. Basically, so what let's say a seller is asking for in a home price versus what they're actually selling at. I have some percentages here that you could check out. First of all, Gilbert's actually the hottest. So assuming, let's say for instance, you're selling a house for 100,000, just for easy numbers sake. The average list price was 100,000 to what it's actually selling for is $103,500. So 103.5% of list. So if you take that $400,000 home, 3.5% of that's over $12,000. Almost 14-ish. Just quick numbers. So that's selling. $400,000 home is selling at least 14,000 above ask on average, right, for any property that's in the city of Gilbert. Avondale is 103.4% of lists to ask or list to sold. Cave Creek's 103.2. Chandler is 103.1, right, and it goes down like the lowest one is actually Paradise Valley at 97.8%. Scottsdale's 99.1. So we're seeing a couple of deals there, but some of these other cities, Gilbert, Avondale, Surprise, big one, Chandler, Mesa, they're all selling above list on average. 2005 is actually close to asking. Gilbert's 100.5, Avondale's 101.2, Chandler was 100.6 in 2005. So to see 103.5 is actually means we're in a much more aggressive market in terms of what buyers are willing to pay for a home. And we're more aggressive today than we were in 2005. So some other news worth considering, and this is actually important to consider as we think about the future. Vaccines this past week were approved for 12 to 15-year-olds. The Pfizer vaccine, nationally, 262 million doses have been given, 116 million fully vaccinated, which is 35.2% of the population. Cases in Arizona, last I checked a couple of days ago, remain below 1,000 a day, which is a good indicator of recovery out of this. 42.8% of the population had at least one dose and is fully vaccinated, is 32.3% of the Arizona population. So we're just about, kind of in line pretty much with what's going on nationally. CDC announced yesterday not needing to wear a mask if you are fully vaccinated. So it seems like we're seeing good signs that we're starting to exit the pandemic. Public events are starting to resume, which is good for business and the economy, local and national. Restaurants and travel are starting to rebound. All of these, though, have very little impact on the housing market, as it's maintained strength throughout the past year. So ever since June 2020, once some restrictions have been lifted, the real estate market bounced back very, very strong. Within the next 2 weeks, it just picked up right where it left off, which means March to pretty much end of May was a speed bump for the real estate market. So basically, instead of prices going up significantly, they basically just stopped going up. But then as soon as things were back to normal, well, as much as they could be at the time, in June, the prices continued to go up and the real estate activity continued. Another thing to consider is the eviction moratorium. Will it stay? So, what is the solution? What happens if thousands of people get evicted from their homes that aren't paying their rents? Right now, they're protected by the eviction moratorium due to the pandemic. So right now, they're not able to be evicted if they've been affected by COVID. Income-wise, health-wise, pretty much from my understanding, the reasons to be affected are pretty loose. So minimal documentation needed, but you can be protected from an eviction. The question is, if that's challenges or that's lifted, you're going to have thousands of people that are going to be homeless, displaced, and where are they going to go? Also, if you're evicted, that's going to harm your credit, so where are they going to go? So this is actually something that I haven't personally seen too much solution into. That could just be me, and I haven't looked into it so much. But it is something of concern for the real estate market because people need to live somewhere. So, where are they going to go if they can't afford it in the first place and they're evicted? This could be a big problem. Another reason why it's a problem is because homeowners are not being paid rents for their properties. Someone who owns one or two single family homes or a condo or townhome that is paying two mortgages, and one of them stops paying mortgages, they're going to be in default or in forbearance on potentially at least the investment property, potentially their own property if they're also affected. So it puts things in a very interesting position. I've seen petitions from large real estate organizations to contest the eviction moratorium and to have it lifted so that people can get evicted. And that actually has been unsuccessful from what I've seen. So for now, it remains to stay. But I've also seen people start to challenge that. Organizations and entities start to challenge that moratorium. So we'll need to see where that heads in the next couple months. Also, keep in mind, since the beginning of the pandemic, when the CARES Act was enacted, there have basically part of the CARES Act was the eviction moratorium, protecting tenants from being evicted due to COVID. Now we'll see, because I've noticed a lot more challenging on that as we resume more to normal. So as you see the trajectory of the progression and the improvement of the pandemic, we're also going to start to see greater challenges with the eviction moratorium and consequently the mortgage forbearance. So we will see how that trickles out. Regards to mortgage forbearance, though, that's basically what I've heard from different lender partners and the news out there, is that the forbearance is actually going to, instead of charging the entire amount of, say a homeowner wasn't able to pay for 6 months, instead of charging them as soon as they are capable of paying, they're just going to put those payments towards the back end of their loan. In the event, somebody doesn't have the money and they need to foreclose, assuming they didn't refinance up to 80% and spent all the money, there's going to be plenty of equity for them to sell their home before they get into a short sale situation or a foreclosure. So there's not really much concern about, a large mass, foreclosure inventory that's going to, boom like it was in 2008. Remember, 2008, the reasons for the recession were because of fraudulent loans and greed. Right now, it's more natural result of just low inventory and well, what was above average demand, and now is cooling demand, but still, pretty natural, um, uncharacteristic, maybe unique, maybe record numbers, but not anything that would be outside of the means of what an economy would flex. A couple other items, jobs. So we had less than expected job growth in last month. 266,000 jobs were added, which is less than in March, but they expect higher than anticipated growth in the coming months as we see improvement in the pandemic, as I mentioned earlier. Okay, so with all these things, going back to the real estate market in Phoenix and making your moves in the real estate market here, if you are a buyer, right now, if the bids that are winning that I've seen most commonly are the ones that are cash buyers, large down payments, waiving appraisal contingencies, which I'll explain that, and buying homes as is. When you waive an appraisal contingency, you're basically saying, let's say you're buying a house for $100,000 and it appraises for $95,000. What a buyer is saying is, I'm willing to pay the difference of that $5,000 in order to purchase this home. And so how that affects a buyer is if it doesn't appraise at value. Let's say it appraised at 95,000 when the house is worth 100, the bank is only going to lend you based on 95,000. So buyers are guaranteeing that they're going to purchase a home for what they offer. So that's what waiving an appraisal contingency is. Buying home as is basically requesting no repairs. I'm buying the house as it is, as it comes. So normally you have the rights to an appraisal contingency and buying a home with the opportunity to ask for repairs. Now home buyers, to stay competitive, are relinquishing those rights. So some things to think about as you're entering into the market. Are you willing to do those things? Are you in position to do those things? If you are, please engage the market, and keep in mind it might take a couple times, even if you are a large down payment, even if you are a cash buyer. Sometimes there are stories out there that people who have 3 or 5% down are winning the bids simply because the homeowner decided they wanted to give a certain family or a certain offer a chance. So there are stories like that out there. So for all buyers, no matter what your financial position, if you're looking to buy a house, you need to purchase a home, you're moving into Phoenix, definitely stay diligent and persistent. That time will come, especially as we're starting to see a turn in the market. If you're not in a position to do those things, it might be time to regroup and talk about some strategies on how to put your best foot forward. So there's other ways other than just putting large down payments or waiving appraisals to get an offer accepted. I mentioned one. There's outside factors. We just need to be careful about how we navigate that, because there could be fair housing issues. Like, for instance, if you put your picture of your family, or you talk about your marital status, or anything that has to do with what would constitute fair housing issues, and a seller were to make a decision on your offer based on some of those items that are protected classes, there could be a fair housing violation. That could be a pretty serious offense. So navigating all of that definitely is a good conversation. I can help you with that if you need. Feel free to reach out. So sellers, if this is an amazing time for you to sell. If you have a property to sell, you are in amazing shape. I had a seller who was interested in, well, first of all, selling their home and just not buying one. So that's a unique position, because one of the issues right now is buying a home and not having a place to move. So sellers, one of my sellers was going to sell, and we were thinking around 340, 350. Basically, I said, I looked at the data and I said, we are way price per square foot is way under what the market is. Let's list it at 390. Keep in mind the highest price home sold in that time in that subdivision was 332,000. So we went almost 48K above, and we sold it in about 4 days. And so after that, 2 weeks later, someone got an offer for 415,000, waived the appraisal. So in 2 weeks span, the houses in that subdivision were worth 25,000 more. So it's just that aggressive. If your area hasn't caught up to a certain price point, it will eventually, if it hasn't already, but more than likely it already has. So yeah, that's just an example there. It ended up closing. It did close, and now that's the comps, the comparable solds in the area are now greater. So that's the kind of activity you'll get. If you have a home anywhere in basically greater Phoenix area and surrounding cities, you're in a good place. Things to keep in mind though, be prepared for a frenzy of offers. There's going to be a lot of offers. It could be just one. Actually, that was my case. My case was just one offer, and that's all you needed. It was a full price offer, 48,000 above the highest sold property, which is great. But the other situation in the subdivision, the 415,000, that one ended up being multiple offers. So yeah, you're going to get a frenzy of offers. It could be overwhelming. So your real estate agent's definitely going to need to help you with that in terms of keeping it organized. Where you will move to next is the most common issue that I've heard from home sellers. Said, yeah, I'd like to upgrade. I'd like to move. I don't know where I'm going to go. I don't want to have the problems the buyers are having. Totally understandable. In one sense, if you're buying, sometimes if you sell for the price that you are selling, let's say, for instance, you sell for a $400,000 home. If you wait even 2 months, you're going to be buying less of a home, potentially at 400,000. So sometimes even selling your home to try and buy something that's only, you know, 50,000 more might even just be even like property or a downgrade. So, you could be 100K above or more, just to get, something, maybe even more than that. So just to get something that you're looking for. I have a client who's wanting to sell for about half, 500,000, and then wanting to buy something in 600,000. But from 600,000, what they wanted like 3 months ago is now worth 650,000. So some of the struggles of a seller, just FYI. Another option you have to make your situation, to solve that problem of where will I move to next, you can sell your home and actually offer in the sale what's called a rent back, or a lease back. So basically what you'll do is you'll sell the house with a contingency that you as the owner, who's now going to be renting from the new buyer, will live there for at least a year or whatever terms that you have. Now, it does make your listing or your home being put on the market a lot less attractive to homeowners who need to occupy the home immediately. But for someone who can wait, who would be willing to live in their apartment and extend their lease until you're ready to move out or you find the place that you want to, it could be a good situation for you as well. Just so you don't have to worry about that. Or will I move to the next question? So sellers though, if you're putting your house on the market, it's an amazing time for you. You're getting top dollar. And to me, I don't think we're nearly at the top of the market. I think we have a couple more ways to go, meaning months. So if you continue to hold, you'll be in increasingly better shape. And that has been true since January 1st to today's date. So a couple things to consider there. So hope this was helpful. I know there's a lot of information, so I will be getting back into doing videos and answering any questions you have. There's a lot of things up the pipeline that are very interesting. The 1031 exchange might be rewritten in the tax code. So we'll talk about that, as well as other issues that come up or just unique stories or things that come up. In fact, I will share with you all that I have tried to purchase a house in this market in the past couple months. So I'll also talk about my experiences there, what's worked, what I learned, and what the conclusion was as well. So once again, thank you so much for joining this channel. If you have any questions, feel free to reach out. My contact information is in the description. And until then, we'll see you next video. Thanks for joining us.